I'm interested in just what was the funding environment like? Because it feels as you've got AI related, everyone wants to be writing checks and to be putting into your funds, but what was the uptake like for you? How quickly could you raise?
Yeah, the funding environment, I'd say it is a little bit of the haves and the have-nots. We've been somewhat fortunate in our history because we have such a unique and differentiated strategy that most people have actually come to us asking to invest, including actually our largest investor reached out to us cold on LinkedIn, if you can believe that.
No. Who?
I can't say. I don't think I can say, but you would know them if I mentioned them to you. So for us, it was a great process, and we're really happy with the outcome. We love our LPs, and they're really enamored with our strategy.
What sort of LPs are we talking about? Who wants to be putting money into startups and diversification in that way at the moment?
It's a range of your usual cast of characters. You have, university endowments, foundations, you have insurance companies, corporations, but also sovereign wealth funds, actually, interestingly, are wanting to deploy a lot more capital into innovation, which I think is really smart for them.
Anyone you wouldn't take money from? I had a conversation with Alexis Ohanian, for example, who didn't want to take Saudi money, for example.
Yeah, we'd be careful about anyone that we'd bring in. Actually, our process is we like to get to know our LPs, ideally, 3-6 months, a year plus in advance. So we would have to feel really comfortable and due diligence before bringing anyone into our fund.
And then the unique selling point is that you basically help bring in talent and build businesses. How unique is that still? Because I've been talking to a lot more of the growth funds or very early stage funds who are basically bringing on wannabe CEOs or people that they feel could build a business without actually the business idea in place yet.
Yeah, it's actually very unique. It's a model that we started in 2012. So we created what's now called the studio fund model. There are now hundreds of these studios that have emerged. And I think what's unique about us is it's the only thing we do. We focus on it, we nail it. Right now, what's happened over time is technology risk has come down. So what you can build anything. The building blocks are incredible. What you can solve is incredible. There's so much open source. There's a lot of AI that's available, obviously. There's a lot of APIs that you can plug and play. What's really paramount is testing market risk. And what we've really validated is we have an exceptional process for validating and invalidating ideas early on.
How?
We'll do a combination of quantitative and qualitative analyses on markets. We have a team of 75 people, which is pretty large for our fund size, that will go and look into ideas and run tests. Oftentimes, we'll actually pre-sell products to customers, validate that there's demand, so that we know, okay, if we're going to spend all the time and the energy to build this, it's going to be worth it, and it's going to be worth scaling.
Of course, one that you're most well known for is Hims and Hers. I've heard a lot of reticence from VCs to do anything really with a consumer right now, unless it's celebrity backed in some way, shape or form, or you're Kim Kardashian. How are you thinking about where the opportunity is to build right now?
I think that there's a really big opportunity right now. A lot of people are talking about AI, things like ChatGPT. The consumer side of that is interesting, and it's happening, and people are using that. It's really growing. But I think the bigger opportunity actually lies in the enterprise. I think AI is going to be deployed into every facet of work. You can think of it, every job to be done in a company, there's going to be some AI layer on it. Every function of a company, every industry, every vertical, there is going to be some specialized implementation of AI, not generalized, but very specialized and unique to a company and an industry and a job that's going to make people faster and better at their jobs, more accurate, and ultimately increase productivity across the economy in a really interesting way. We're creating a lot of companies in that space. We have a history of creating companies like Replicant, which has used AI to automate call center technology, like Butter that's used AI to help payments go through online and can increase companies' revenue by 5 or 10% with just plugging in technology for a 24 to 48 hour period. Imagine if your top line can go up that much. So there's going to be a lot more interesting ways to deploy that across every sector and every place in the economy.
This is as we face a tougher environment from an economic perspective. And there's a lot of work that's been done to show out of the ashes of a difficult economy come some brilliant businesses. We've seen the latter-day crop of Airbnb and Uber be born into that difficult environment. Where are you seeing this talent grow? Where are you seeing these businesses most fruitfully be built?
Yeah, so in a downturn, there's more talent availability than in other periods of time. We have a flood of talent. We have thousands of people applying to build companies with us, which is incredible. And where's that talent coming from? Some is companies downsizing, But a lot of it is toward the end of the last cycle, people were really gravitating toward the growth stage. They were figuring, look, I can go work at a company for a year or two. It's going to go public. I'll have a nice payday, and then I'll be done. Since then, that's been delayed. Some of those stocks have come down. So all of that talent, which is an incredible group of talent that knows how to scale companies, they're boomeranging back to the early stage. So I think that's one thing. The second thing is there's dramatically less competition in an environment like this, as you'd imagine. In a crazy environment, everyone's getting funded. People are copying your ideas. Every VC wants to fund number 2, number 3, number 4. It can actually destroy the market, which is pretty bad. And then the third thing that I'd say, is really important in a downturn is you learn the right habits as a company.
Yeah.
You're forced to. Actually, half of the Fortune 500 companies were created in downturns or recessions, according to Morgan Stanley, which are very unique, discrete periods of time in our economic history. If you can measure unit economics, make sure it's a good model, make sure that it can scale on its own, you're bound to build a good business in good times and bad times, and we're really leaning into that as a firm.